Welcome to the Elevated Trader Podcast. I am Dr. Kristin Kidgel.
And I am Tracy Ball. Join us every week as we journey into becoming better traders.
We believe becoming better traders involves elevating our skill, mindset, and our health. In each episode, we will discuss the current book we are exploring, and we invite you to join us on this journey.
Are you ready to elevate your trading, mindset, and health to the next level? Let's do this.
Welcome back, everybody, to the Elevated Trader Podcast with part 3 of Candlestick Charting Explained by Gregory Morris. By the way, do you have the 3rd edition? That's what I'm looking at.
You know what? I think I do. Let me just double check because I'm not 100% sure.
This is the episode where we are wrapping it up, correct?
That is correct.
Those of you that listened to episode 1, you will have figured out that this is a very thick book and a little bit difficult to read from, you mean War and Peace?
Yeah, there you go. And yes, I'm in the 3rd edition.
Sweet.
Yeah.
A little bit difficult to read front to back, but not horrible. But it totally can be used as a reference guide if you want to just pop in and look up a candle or a pattern.
Yeah, absolutely. Definitely. And I mean, as far as I'm concerned, you'll probably feel the same way. The real meat and the potatoes actually came in the 10th chapter. That's what I found. The 10th
Is that
and the 11th.
Statistics with all the tables and everything?
No. It was in the last part there where they were introducing. They were mixing Western and Japanese candlesticks. They were trying to bring the whole thing back together again. And as we've talked about many times before, that, you know, any one of these like candle patterns or technical indicators or whatever it might be that you're using to trade with, anything at all, when used individually, usually doesn't perform very well. But when you start combining those things together, that's where you start to really fine tune and build a strategy that is potentially quite successful. Mm-hmm. So now I did find it interesting because in here, like, I love hammers. Love them.
Maybe shouldn't love them that much.
Well, yeah, kind of. And that, but here's the thing. So one of the things that I have talked about many times is location. And this book touches on that all hammers are not created equally. You need to have it at the right place. And that's, I think, what this book really starts to dive into in the last few chapters, is focusing on that part of it. Because a hammer alone, I mean, and I really like the analogy that they used about the car braking and how even your candle patterns, whether your car, as you brake your car, you either slow down and then continue, or you slow down and stop, or you slow down, stop, and reverse. And the candles are exactly the same way, right? Mm-hmm. There's going to be times in the market where the market is moving in one direction and then it starts to slow down and we start to get some of these patterns in place. And then it'll continue, or it goes sideways for a while, which is kind of a stop, or it slows down, stops, and then reverses and heads in the opposite direction. And just like in your car, there's going to be times where you're approaching a street light and there's no intersection. There's no place for you to turn. It's just there's a stoplight. Maybe it's a pedestrian crossing, whatever it might be. But there's going to be times where your car slows down and comes to a stop, but then it continues on its path. And there's no real reason for the car to slow down, stop, and for you to expect that it's going to turn around and go the other direction. It doesn't make sense in that particular location. So I really like that analogy that they were using to explain candle patterns, because it's no different with your candle patterns. When your candle patterns are coming, and there's going to be times where people are going to be locking in profits, and that could potentially create a pullback, just a resting time. And that's going to be moments where you're going to start to see that trend slow down and maybe come to a little bit of a stop for a little bit before continuing. And so I thought that it was really pivotal to bring that point in, because it's the one thing that I had been really missing through the first 9 chapters is, yeah, you know what? You're not including this. You're not including this. All these statistics mean not a whole lot because you're not taking into consideration the location. You need to take the location into consideration. If it makes sense for it to reverse there and you get a reversal pattern, then that's a strong, high probability trade. But if you're in the middle of no man's land with no real reason to reverse, then a lot of those reversal patterns aren't going to work.
Yeah, I think some of the biggest ahas I've had were maybe things that I had heard or knew, but kind of sunk in, because in essence, this book really is the Bible, so to speak, in the history and the data and the amount of research they did, right? Those numbers are huge. I think some of the ahas were reversal patterns, and like when it's going bullish to bearish, the bearish moves. I mean, those are the moves right there. And a lot of the statistics were surprising with reversal patterns or just continuation patterns. I think there was a lot of moments where I either, like, what I thought I knew and had learned at one point was right, but some of it was wrong. I mean, it was kind of like 50-50. So I don't know. I found it interesting. I think if you do not know how or ever enjoy trading bearish, I think it's a disadvantage. You should be able to trade long and short.
Completely agree. And, again, I think that takes time. If you can't trade long, you're probably going to have a difficult time trading short. So, I'm okay with focusing on learning how to do the one and then practice doing the other, but it's definitely a must. If you want to trade, you need to be able to do both. And even the ability to hedge is a form of trading the market short. So you don't necessarily have to enter into a short, but knowing how to protect your positions and maybe locking it in or exiting a position before the market actually heads in the other direction, that's advantageous versus just buy and hold for indefinite period of time. But
well, you also have to remember that you can flip your chart. So if it's a bearish day, just invert your chart and it looks bullish and you're like, and it's a little bit of a mind trick. I mean, your eyes and your body will literally have a different feeling. Well, mine did. I mean, but I was paying attention to it, going, oh yeah, look at this. This is like, I should have just flipped this chart an hour ago.
Yeah. The only problem is you when you're looking at a chart like that, just make sure that you don't put the wrong order in. Right. Where you think you're going to enter in long and what have you.
You'll do that once, if not twice.
Yeah, exactly. And TradingView doesn't allow you to see the prices, actually, when you invert the chart. It just inverts the chart and there's a percentage along the side. It doesn't show you the actual price, so it can be difficult. But definitely for you to confirm whether or not you see the pattern on the bearish side to try and train yourself, I would flip it long to see what you're looking at and then flip it short again, or flip it back to normal, so you can get more familiar and build that muscle memory.
Well, but TradingView has that capability of seeing, multiple charts in one screen. So you could have it here and then have it there. But then again, you have to maybe put text on the chart going, this is inverted.
Exactly. Yeah. So I'm glad that we've taken the time to read this book. I mean, like I said, it's one of those ones that you're going to leave on the shelf.
It was intense.
Yeah. Was there any other takeaways or anything that you actually pulled from this that was valuable for you?
I learned what I thought about our personalities was true, that you're really into statistics and I could care less, and you were supposed to explain them all to us. And I was supposed to listen as I screamed past all these figures and charts, and I was like, ooh, yeah. But, another aha moment I think I had was what technical indicators, other things that they like to add. And Tracy, tell me about filtering. What did that mean?
Well, again, the filtering and all that is combining additional signals in with your candle patterns so that you can filter your signals. So again, that could be using support resistance. It could be using a MACD. It could be using a stochastic or an RSI or some type of an indicator. And basically, when you get a candle pattern in conjunction with, for example, if you get like a reversal signal, and let's say that the trend is currently long and you're getting a reversal signal and your RSI is also showing that it is overbought, then you've got two things now that are saying, okay, well, first you've got a reversal candle pattern that's showing up, and you have another indicator that is signifying overbought, maybe now is the time that I can start looking for potentially setting up a reversal. Now, if you combine that with also being at resistance, you're getting even more. So the more times you can stack where it's like check, 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 the more you're going to increase the likelihood that that trade might be successful. It's not a guarantee because there's no guarantees in the market and there's no perfect system, but the more that you can create confluence, the more likely of success. And that's really what the filtering is to try and filter out the noise, because like we mentioned earlier, the markets ebb and flow. There's going to be moments where the markets are going to be pulling back, or whether they're going to go up, they're going to go down, and they're going to do that regularly, like they're breathing. They have a mind of their own. And when the market starts to pull back a little bit as it's moving, it's really hard to know whether that's going to be a time where it reverses or if this is just a pullback. And there's certain ways that you can start to filter to know whether or not those patterns are just resting patterns or whether they're just ignore them. And for myself, for example, I really don't want to be looking at anything that isn't at support resistance. So as far as I'm concerned, I'll set alerts at my support resistance levels. And when price starts to get there, that's where I'm going to be alerted. I'm going to start looking at price in those ranges. And if I see the things that I want to see, then that's where I'm going to start setting up my trades. And if I get anything in between, just leave it alone. It doesn't matter. It's just noise. And that's kind of what the filtering part is for. It's to help you filter out the noise of the market.
I have to tell you that because of the other things that I use, and I found the list in the book of the ones they were using, the different indicators to help filter. So you use support resistance, I use pivots, which I thought was interesting because in the interview, when they interviewed that guy at the very, very end, you know, he was talking about pivots. I'm like, that's so cool. But, you know, in the statistics boxes about when they're using the indicators, or what they also are calling these, you know, filters, so to speak, for decision making, I guess, there was one in particular that I had never heard of. And so we've heard of RSI, which is basically Wilder's, the guy's name, right? The guy's last name, Wilder's Relative Strength Index. They have percentage B, which is the Bollinger's volatility indicators. They had the MFI, which is the money flow index. Percent D, CCI. They had the percentage K, which is Lane's fast statistics. I mean, we see a lot of these. MACD is huge, right? Everybody, you know, and their mother at one point has used MACD. But the one that came out on the top over and over and over was an abbreviation. It was NSINC. And I was like, I got to go look this up some more. So it stands for North Systems In-Sync Indicator. In-Sync is one word. And what it really boils down to, it's multiple indicators combined into one indicator. So I find that very interesting. I think it was like 4 of these on this list. And by the way, I found it on TradingView. One dude wrote the script for it.
Really? Cool. I did not look for it, so.
And I added it to one of my charts.
And it's the NSINC.
Mm-hmm. And so I did some Googling about it and looked into it a little bit. And I was like, you know what? This is fascinating. It's taking 4 of the top indicators that most traders use and puts it all in one graph. And it makes sense. It's really simple. But what it's telling you is that a lot of the indicators are firing. So instead of having all these indicators everywhere, you've got one, which is using a bunch. So anyway, I thought it was cool. And I've used it the last couple of weeks since I read this chapter.
That's very cool. I cannot find it on TradingView, so we'll have to review that.
Okie dokie pokey.
Is it called anything else?
North Systems. Actually, I think it's In-Sync Indicator. INSYNC.
Oh, there we go. In-Sync Index?
Yeah, that'll work too. He probably is changing the words a little bit.
That's the only one. In-Sync Index. I'll have to read up on it. It's interesting.
I think you should write a script on it for TradingView, since we're talking about it, and then they can just go to the website and go to TradingView and find Tracy Balls.
When I have time.
indicator?
When I have
Oh,
time.
that time thing.
Yeah, when I have time. I have a lot of other projects that I want to do. Coding is not at the top of my list.
Yeah, but how many have you written?
5.
Mm-hmm.
Yeah.
How many has Kristin written or wrote? How many has Kristin wrote?
No idea. How many have you written?
Zilcho. Does Kristin
go.
know how to write code? No.
Can Kristin learn? Yes.
Yes, but does Kristin want to? Hold on. I have something I'm going to say. When I have time.
Oh, you're such a funny girl.
Okay, we
All right.
digress. But
Anyway.
those are important things. I think that
Yes.
this book showed us is in the data that in sync one was constantly getting the best results.
And it makes sense, right? Because what I just said earlier, which is when you have more things that are creating confluence, so agreement, they're in agreement. The more time, the more things that you can have in agreement is going to increase the likelihood of success in a trade. So if you have an indicator that has 4 of them built into one, guess what?
I like it.
Yep, you're going to increase the likelihood. So the real big takeaway from this book, location matters. Don't take everything on its own. There's absolutely, little individual things, they don't mean a lot, but when you start to combine it with other things, you can start to really fine tune and create a system that works for you. And there are so many different indicators out there, so many different patterns out there. The markets reward the specialists. We've heard Jeremy say this before, and there is no reason for you to inundate yourself with every single one of them. Get familiar with some of the more common ones. Practice them. See what you like. Work that way, right? Instead of overwhelming yourself. There's no reason to know every single pattern. There's patterns in here that are really, really high probability patterns, but they only happen once in a blue moon. So what's the point of even waiting for them, right? It depends on the type of trading. If you're only trading once a year or every 3 or 4 months, then maybe you can watch those and pay attention to them. But if you're trading daily or even weekly, then you're going to want to look at some of the more common patterns and practice and build it. I like the hammer. That's the one I like because the hammer is actually, we've talked about this before, but the engulfing pattern, the piercing line, the one right shoulder, there's the double bottoms, all of them, when you add those candles all together, they all create a hammer. They all equal the same thing. So really the hammer encompasses all of that. So when I say that I trade hammers and I like hammers, I'm saying that I like hammers. I like engulfing patterns. I like piercing lines. I like one white soldiers. I like harami candles. They're all the same thing to me. So it's just on a different time frame and I see it that way. But anyway, that's kind of the gist of it.
Yeah, I think I would like to, if someone said you have to pick one that you like the most, I think I would pick the inverted hammer because I like those reversal patterns.
Yep.
Which is, and you get bigger moves with
For
reversals.
Sure. Yep,
They're
for sure.
faster, which is really great for futures.
And when I say that I like the hammer, I'm also talking about the inverted hammer. It's just basically it's a body with a tail on it. That's what I'm looking at.
A body with a tail. I think we'll just end on that note.
We will. So join us for our next book. Did you want to introduce our next book?
Ooh, yes. We are switching it up to a health book.
Woohoo. Our first health book, correct?
Are you serious? Is it our first one? We've done so many mindsets and trading ones.
Yep. This is our first health book. Now, why is health important, first of all?
Well, health, without good health, how could you possibly make good decisions and be in a good mindset?
Exactly. So this is applicable to everybody, and that's why we're doing it. We are looking at creating balance in our life and expanding our net worth, our growth, our personal knowledge. We're looking to expand all of that, and if we don't treat our bodies with respect and dignity that it deserves and we don't take care of it, then you know what? The mind's going to fall apart. We're not going to be able to do all of those things. And ultimately that ends up meaning that our network and our net worth and our skill sets start to diminish. So what are we going to read?
Okay, so this book is written by Harvey and Marilyn Diamond, and it is an old school book. Actually, I did actually read the first edition. This is not the first edition. I think you're going to read the first edition, and I'm going to read one has a more earlier release, which we can just go over, when we do the first episode.
Yeah.
And when we actually crack open the books, because I haven't opened mine. Is yours going to be on a PDF, or are you actually going to hold it?
No, it's going to be on my Kindle.
Okay.
Yep.
So I actually have this cute little book here with the tiniest of writing for my 50-year-old eyes. And do you remember I was complaining how big it was?
Yes.
It's over 400 pages, but what I realized is the last third of it are recipes.
Yay.
Yes.
So we'll be able to try some recipes too for you all.
I think so. We should definitely do that. So let me just read to you what it says. The national bestseller by the authors of America's #1 diet book. I don't know how much I feel about the diet book. But anyways, it says over 1 million copies in print. I guess that's a big deal. I personally am going to be reading Fit for Life 2. You are going to be reading Fit for Life 1.
That's correct. So Fit for Life, either the first edition or the second edition. Join us in the next episode for part 1 of that book. We'll see you there.
Yep. Thank you for joining us today. For more information about the show, as well as our list of current reads, check us out at www.theelevatedtrader.com.
Remember to subscribe and share if you found value in today's episode. See you next week.